Hi, I'm Patu from freefincal, and let's take a look at how India invests in its index funds. So this is AUM data pulled from AMFI, not pulled, it's available for download. Many people are worried about the recent statement by Michael Burry, made famous by Christian Bale in the movie Big Shot, the fund manager, who uh, who saw the 2008 crash well before it actually happened. He says that there's a similar crash waiting to happen in the index funds for the US, where recently the passive AUM has just about overtaken the active AUM in index funds and ETFs. He says that the volumes traded is very small compared to the actual assets linked to these stocks, and therefore price discovery, the mechanism where demand and supply determines the price of stocks, has been removed from the stocks associated, at least most of the stocks associated with the index. And he says when people stop believing in indexing or remove money from this in large volumes, then there will be a big crash. That's his opinion, right or wrong, I don't know. The point is that immediately people started sharing this video, sharing this article in groups and WhatsApps and so on. Um, uh, I mean, the point is that has got absolutely no relevance to an Indian context, because we are very, 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 very different from how investing happens in the UX, and that's what I want to point out in this video. So let's just go here. So the first data is, so that's the total AUM as on June 2019. That is 24 lakhs 25,040 uh, crores of money is invested in all Indian mutual funds and index funds, mutual funds and ETFs all together. And you can see that the index AUM is only 5,719 crores. That is just 0.24% of the money is in index funds. And out of this 5,719, almost 41.5% is from corporate investors, 30.6% is from individual investors, that is investors who can invest more than 2 lakhs at a time or 1 month, I don't know, but at a time I think. That's 30% is from individual investors, and the retail investors hold only 1,586 crores, and that's just 27% of the total money in index funds. Gold ETFs hold about 0.2% of the full amount, and ETFs, that is non other than gold, all the you know the Nifty Next 50 ETF, all the smart beta ETFs and all that, they account for 5.8% of, you will have to account for the Bharat 22 ETF, the PSU ETFs, and so on. That's essentially why the money is larger here. And you can see that the most of the money in the other ETFs is coming from corporates who hold these kind of the Nifty and the Bharat 22 ETF. I think both together they will hold that kind of money. So, and the banking ETFs as well are reasonably popular. So we are like, I mean, come on. I mean, uh, if I add this 0.24 with that 5.8%, it's like 6%. Man, I mean, conservatively, 6.5% of the money, of the total money in mutual funds is in index, is passively invested. So I don't worry about indexing, disrupting price discovery in the Indian markets. I doubt whether I will even see it in my lifetime. So that's going to take a lot of time. Of course, people talk this and that on Twitter, but people always talk. But this is the data. Amusingly, if you take a look at the index funds, that is that 5,700 crores of that money, uh, 61% of it is in direct, and 59% of that money of that direct contribution is in growth plans, 2% is in dividend plans. The rest 39% is in regular plans, and out of that 39%, 34% is in growth funds and 5% is in dividend funds. This typically happens, that is when a distributor has to push an index fund due to orders from the AMC, they will ask the investor to buy a dividend option. That is the reason why you see the dividend share is higher, much higher in the regular plans than in direct plans, more than double. Also, if I will write a detailed post on this for certain funds, especially like the UTI Nifty index and the UTI Nifty Next 50 index. There should be other mutual funds I have to find out. The regular AUM is higher than the direct AUM. That is really amusing. Why would an investor invest in an index fund which pays out commissions, like, from their investment value? That just, I mean, it's completely illogical. But that's what happens. So we are a long way away from any kind of index bubble. There is no index bubble in India. There is no interest, real interest for index investing in India. People talk a lot. Don't go by what you read on Twitter. Don't go by what you see in Asan Ideas of Wealth. Uh, just a handful of people make a lot of noise in a 50,000 member group, and most of them are practically silent. They just listen. They either don't read the post there, or they just are silent observers. So that's what I wanted to say. I write about index investing because I love it. I like the whole idea, and there is enough data that I mean, index, that is, active funds are having a big I mean, are having big trouble trying to beat passive funds. That is indisputable. That's data. I talked about it in the video day before yesterday. I wrote about it yesterday. But that doesn't mean people are awakening to this prospect. Perhaps the trend will change first in large cap funds. We will look at that closely. But still in the mid cap segment, small cap segment, there are really no viable options for index investing. Of course, we just have Motilal started these two index funds, but let's find out how much AUM is they have. So let's find out. Also, people are excited about Axis Nifty 100 index fund. We will talk about that in a few days, and consider how that is for investing. So that's what I want to say in this video. I will do a detailed post on this with respect to other categories, etc., all these AUM statistics. So thank you as always for listening. Bye bye.